Hey guys, All in Crypto here, and welcome back on this manic Monday for another daily cryptocurrency market update. Where do I even begin? There's so much going on. We'll try and break a lot of it down. The Bitcoin network is currently experiencing never before seen congestion, and I think this is because of the BRC20 NFT, but not NFTs that are taking place on Bitcoin right now. We've got this kind of meme hysteria going on, and I think this has had an effect on the Bitcoin network. And we're seeing a record congestion on Bitcoin's layer one, and it's very negative actually for Bitcoin. However, you guys will know, and I really wouldn't be surprised to see Bitcoin's price actually resolve a lot of what's going on. I think that the cryptocurrency market is selling off for internal issues, not because of other markets. You know, other markets are pretty flat today. It is a bank holiday in the UK. You know, gold's up, which should be good for Bitcoin. The dollar is slightly down. The futures market is lackluster. There's not really a lot going on elsewhere, yet the cryptocurrency market is selling off. And it did sell off on Saturday, which we did speculate could have something to do with Celsius users being able to withdraw some of their crypto assets. So it's interesting. You know, let's break down and start. And we did a video earlier looking at this. You know, Binance had halted their Bitcoin withdrawals because of this. And there was a lot of speculation that actually a record number, 4 point something billion worth of Bitcoin had left Binance. And actually, this was, of course, as the media always picks up on these things, suggested that people were fleeing the scene or exiting, you know, based on insider knowledge. However, it really just turns out that Binance were just moving funds from their hot wallet to their cold wallet. And of course, the Bitcoin halt on withdrawals is due to fees and also this congestion. People are having to wait a long time, and you've actually got transactions failing. It's not a good look for Bitcoin. You know, Bitcoin is an anti-fiat. It's been doing very well on the back end of all the fiat kind of drama that we've seen take place in the banking sector, which we'll talk about because it's still yet to get worse. You know, my job is never easy as someone who tries to compact everything going on in the crypto space and elsewhere in just one video. But we will try. You've also got people like Robert Kiyosaki calling for a financial pandemic that has just started, and the crash is now. Now, I disagree and this is where fundamentally I disagree with the bears. I think the crash comes later on. I don't think that the crash comes when everyone's expecting it. And I think you're actually going to have a 40k plus Bitcoin this year, despite everything going on. And ultimately, the crash is going to come later on. I think there's this window of opportunity that we've looked at with rates going sideways. It seems very likely that rates aren't going to go up anymore after the 25 basis points. And that was a bit of foreguidance from the Fed saying, look, we'll see if we need to up rates, then we will. But it's going to be data dependent. Talking about data dependency, we've got the CPI coming out on Wednesday. Never a dull moment, guys. And ultimately, a lower print is expected, but marginally at 4.9. We've looked at a number of commodities. Lots of commodities are going on and putting in new lows. However, whether that reflects in the data, you've got true inflation at 3.89% in the US. In the UK, it's like 15%, so mixed bag across the kind of globe. However, I think the Fed are done with hiking. I think markets are going to do well. We've covered all this in great detail. You know, on the shorter time frames for Bitcoin, we've really looked at two scenarios. We do not want, if you want the bull case, in the short term, 26,980 getting taken. Otherwise, you're going to come down to this neckline of our head and shoulders that everybody is now highlighting. Certainly, even the bears, you know, are very much claiming victory over Bitcoin this year. And if you look at where Bitcoin is at so far this year, you know, you've been bearish and Bitcoin is up 71%. Still, despite everything going on. I think if this was... There's a disconnect between fundamentally what's happening with crypto and the price. Massive, massive disconnect. And I think that you only need to look at what's happening in meme coins. And by the way, congratulations to anybody that's made money on that. I'm not a hater at all. To realize that fundamentals right now and crypto are apart. You know, crypto's largely speculative. But we are moving into an age where actually usage is what's going to drive the value of these cryptos. But certainly Bitcoin having this amount of congestion, which is supposedly linked to the Pepe token, believe it or not. Behind the congestion is believed to be a surge in BRC20 transactions in the last few days due to meme coins like Pepe. Pepe's an ERC20, by the way, not a Ethereum gas fees. I tried to do a swap on Uniswap, about $60. Now that's less than it has been way back in the bull market, but you've got Bitcoin doing what it's doing, and you've got the second largest crypto, Ethereum, and this is why actually we're massively into smart contract protocols like Algorand, like Cardano, like Polkadot, because we think that they solve the issues. We think technology evolves and advances. And ultimately, if you look at any technological revolution, it's typically not the first that wins in the long run. But anyway, I think Bitcoin is quite separate from Ethereum and sort of smart contracts. I think it's different in the sense that it's more of a store of value and anti-fiat than a blockchain facilitator, more of an anti-fiat than a kind of Web3, if that makes sense. But essentially, the meme coin trading hype drove Bitcoin transaction fees to their highest point in 2 years on May the 3rd. The total amount of fees paid on Bitcoin blockchain reached $3.5 million, jumping nearly 400% from the late April. Developed after the ERC20 token standard, BRC20 is an experimental token standard recently introduced to allow users to create and transfer fungible tokens on Bitcoin blockchain. It's currently becoming a hotspot for meme tokens, and this, of course, is why we're having this congestion. Because of NFTs on Bitcoin. I mean, sometimes you just have to ask yourself what the hell we're doing in crypto. You've got meme coins that are rocketing, whilst cryptos that I think are going to be, change the world in many ways are just staying stagnant and not really doing a lot. And then you've got Bitcoin losing to NFTs. And this is the problem with Bitcoin maxis, that they can't see the error of their own ways. All that being said, despite Robert Kiyosaki, despite all the doom and gloom, the banking crisis and everything, and I almost feel, very much against the tide here. I'm still bullish on the cryptocurrency market, and I think 30k gets taken. Technically, we have structure to the upside. Even though people are calling for this 25k neckline retest, the bears still don't admit that this is a neckline and this is an inverse head and shoulders. And this is the issue, right? I can see the bearish arguments and very much actually agree with quite a few of them. However, I think the bullish one far outweighs it. And since really the start of this year, we've been laying out so much information, looking at the macro, looking at interest rates, looking at price cycles, looking at Bitcoin on its own merit, looking at Bitcoin across the market, looking at other markets like the dollar, the equity market, gold, so on and so forth. And I've ultimately came up with a bull case. Doesn't mean everything's bullish, but it just means that, ultimately, really what we're trying to do is capture the bear and bull markets. And we've done a pretty good job of capturing the bear. And a pretty good job so far of capturing the bull, considering Bitcoin is still, if you take a zoomed out approach from the start of the year, 70% up. Altcoins are getting hit hard. They will have their day in the sun and outperform Bitcoin eventually. However, this is a very volatile, low volume in relation to the altcoins market. It's very interesting to me that Bitcoin has a lot of volume if you look at the volume by price down here, more so than it had anywhere here, and there's quite thin volume above it. Right now, all you're doing technically is resisting off 30k. Significant level. But you will break through it, in my opinion. You'll take 35k and then 40, I believe. And that's still the plan, guys, despite everything going on. And this is the difference between having a plan and a strategy and just, whimming it. Lots of emotions on Twitter right now. It is very negative what's happening with Bitcoin, but it's not the end of the world, in my opinion. And actually, I wouldn't be surprised to see Bitcoin shake this off, which sounds really strange to say because it is significant, and it shows a real shortcoming in Bitcoin, and throws a bit of shade on it. And the fact that this is occurring as a result of NFTs is never a dull moment in crypto. Interesting. You've got Robert Kiyosaki. Financial pandemic started. Crashes now. Suggests going to London Real and listening to two of the very smart, experienced friends, Brian Rose, who I think has been proven to have done some pretty questionable things, and Jim Richards, who is okay, discussing financial pandemic. Please invest in yourself and your future. Future is bright. People like you take care. So I don't think the crash is now. I don't think the crash takes place when everyone's expecting it. I think it takes place later on down the line. Let's listen to Janet Yellen talking about the debt ceiling. And you know, there's been this kind of, and look, she's almost an actor, Yellen. You know, look at the kind of distress, the unhappiness on her face at the thought of the US not printing more money and failing on their debts, causing a complete catastrophe globally, not just within the US, and a meltdown of finance as we know it. You know, that is not going to happen, in my opinion. They're just going to print money and up it, you know, and they're going to continue to do so indefinitely because the system is a credit-based system. Credit bears interest, certainly at these high interest rates, and you have to inflate it in order just to make those interest payments. Look at what's happening with the deficit. Look what's happening across the board. And this is why I think the dollar is going to be weak eventually, and has been, and is going to continue to do so. And I do believe they are done with rates. Unless we see inflation really raise its head, I don't think they're going to up rates whilst rates are higher than inflation itself.
Paint a picture for everyone. What happens on that day? Let's assume for the sake of argument it's June 1st. What happens that day if the debt limit has not been extended?
Well, Treasury finds itself in a position where we're unable to pay all of the bills that come due that day. And this would be really the first time in the history of America that we would fail to make payments that are due. And, you know, whether it's defaulting on interest payments that are due on the debt or payments due for Social Security recipients or to Medicare providers, we would simply not have enough cash to meet all of our obligations. And it's widely agreed that financial and economic chaos would ensue. U.S. Treasury securities are the safest bedrock security underlying the global financial system.
And this is the issue right now. That is no longer really the case. And the fact that they're even bluffing, fear-mongering on the thought of them defaulting, you know, is insane. If the US defaulted on their debt, they'd lose all credibility as a financial body. All pensions would get wiped out, literally. The dollar would spiral into a deep darkness. All of the countries would get annihilated. And the dollar and the US would well and truly lose its status as a financial powerhouse. Do you really think they're going to allow that to happen? We still have the banking crisis going on. You know, 190 banks could collapse according to a study. There's 720 yesterday. There are some real strains in the banking sector. I don't believe that, and I looked at this with my patrons yesterday. Anybody that wants to join the Patreon, it does help being a part of a community, certainly in times like this. I don't believe that people are comparing 2008 and 2009 with today, right? In terms of, yes, okay, there's been more money lost in terms of assets in the banking sector, but what they failed to realize, and this is according to the USM1, so this is from the Federal Reserve, in 2008, 2009, you had $165-ish trillion. Today, you have 18.9. So it hasn't adjusted for anything. You know, I don't think it's as severe. The money back in 2008, 2009 that went had a lot more weight behind it than the money that's gone today. And actually, in 2008, 2009, these banks were allowed to fail. Today, we've seen the US step in. So there's a lot going on. Wednesday's going to be interesting. Ultimately, I think they're done with rates. And I think the markets do very well under a sideways period of rates. This is our macro view. We also have technical views for upside. You're very much in a range right now for Bitcoin. And it makes sense. You know, we've always looked at 30K, very obvious, nice round number. Technically, it's significant. You got a nice bit of volume there for the first time in a while. We've always looked at 30K being resistance. That's exactly what it's acting as. In my opinion, you could just be coiling up here. If you take 26,980, then do look for 25. Altcoins would get pretty hit hard under that. But in my opinion, you know, take these, what may seem as curses. You know, we are long and strong, so we took a position back in the market from the start of the year. You're rarely going to get instantly gratified like we have been buying. But in my opinion, you know, this is still a great opportunity in regards to getting into the crypto space if you're looking at it from an investment point of view, which I think most people should be and not trying to trade the market. 30K is acting as resistance. I do expect it to get taken and for us to see upside. If we run the 25K, that's when things start to get a little bit shaky. And then, of course, we're totally wrong on this inverse head and shoulders if you do run the right shoulder. But we will see. For now, this could just be coiling up. It's very negative that this is happening with Bitcoin. But in my opinion, it's not the end of the world. And actually, I wouldn't be surprised to see Bitcoin shake this off because I don't think fundamentals are largely at play here when it comes to crypto prices. I think there's a massive disconnect between, we've all seen that famous clip of Jeff Bezos talking about Amazon in the dot-com bust, where he said actually the price was going like this, but every metric of the company was going like that. And that's very similar to the kind of situation you have with blockchain. So keep the faith, guys. You are investing in a 10, potentially one day $100 trillion industry. And right now it's at 1 point something. You know, it's going to take a little bit of time. But ultimately, still confident on the bull side, despite everything going on, which sounds crazy. But we will see. Are you Michael Burry or are you the banks right now? Let me know in the comment section. On that note, I'm going to love and leave you. If you've enjoyed this content, like is always greatly appreciated. So is a comment. And if you're not subscribed, feel free to do so. See you all in the next video, guys. We've got some interesting things to cover this evening. We're going to be looking at some recent comments from Buffett and generally about the dollar system broadly. I don't think now is a time to be panicking. I think it's always amplified. And I think if you take a zoomed out approach to Bitcoin, you know, anyone claiming victory about being bearish is, obviously looking at an hourly time frame or less. All I've got for you in this video, guys. See you in the next one. Thanks a lot for watching. See you shortly.